incredibly important service providers are here. I'm going to have everybody introduce themselves, and then we're going to dive in. I realize we only have an hour, but we've got a lot to cover. So would you mind introducing yourself?
Sure. My name is Courtney Van Feckman, and I work at Tradeweb. I think most of you are familiar with Tradeweb, but just for a bit of background, we represent the largest dealer-to-customer TBA platform and have about probably a 95% share in that particular market. At Tradeweb, I look after the institutional client rate strategy group, and prior to that, I managed the mortgage platform for a number of years.
Thank you.
I'm Larry Gioia. I run EMBS. We're a group of people from Solomon Brothers days who provide data out to the street, the buy side, and participants of all sorts there. We provide data in files as they come from the agencies, as they used to come from them, also as they in our EMBS database format and through our screens. Just celebrated our 20th anniversary, and I want to thank everybody in this room for that. Everyone's been incredibly supportive of us. Thank you.
Can I ask the speakers to speak up a little bit?
Oh, sure.
Thank you.
My name is Mike Acevedo. I work with Brokerage Financial Solutions in the product management group, and I have been working on the MBS space, in the MBS space for quite a while now. So if you want to ask me about the last time Freddie Mac had an exchange to the gold program, I can't help you with that because I was not around back then. I'll be talking about the operational side, post-trade. Can you hear me?
Oh, yeah, that's good. That's good.
Oh, sorry about that. All right, so I'll be talking about the operational side of this big initiative.
Good morning, everyone. My name is Barry Pavel. I'm with the FTSE Russell Yield Book team. I am a director of the North America Client Relationships, and I do quite a bit of work in product development, including working on the single security platform. My colleague Nikki is here as well, and I'll be representing the analytics side, and she'll be later talking to you about the index side of the business.
Hi, everyone. My name is Anshul Arora, and I am a product manager at BlackRock for Aladdin's mortgage trading and operations platform. I work very closely with our engineering and implementations teams to ensure Aladdin is enhanced to support any new market trends as well as any regulations. I will be walking you through BlackRock's current engagement model as well as the proposed Aladdin timeline to conform to the new mortgage industry standards.
Hi, folks. My name is Jackie Josephek. I work at Bloomberg. I'm a product manager there on the agency side. I work closely with our engineering staff who sit right by my side. We're working closely to implement, obviously, many targets and milestones as we approach UMBS next June. Happy to be here today, so thanks for all of your attendance.
So thanks for introducing yourself. So I think each of you have a presentation or a discussion you're going to have, and then we'll open it up for questions when they're done. I think, Mike, we'll start with you.
Sure, thank you. Okay, so
Here's that.
Sorry. You're a tech guy, right?
Yeah, we'll take that.
I can't see.
Yeah, there you
Okay,
go.
there we go.
Green light
Okay.
at the top.
So, Broadridge is a large fintech firm, and we do a lot in the investor communication space and also in the transaction processing. So today I'm going to be talking strictly about the single security and the post-trade activities. Okay, so we know there's a lot going on throughout the life cycle. You have the pre-trade analytics, you have the trade execution, and then you have the supporting of the operations from the allocations perspective and also from the clearance and settlements and books and records. So that's the space that I'll be talking about today. Okay, so we started this probably about 2 years ago. We started a working group with the allocation management group. Being it was still far off, we did get about 6 or 7 firms that joined in, and we started talking through this and looking at how it would possibly affect our lives going forward. Approximately the end of 17, we had SIFMA come in and speak to our executive steering committee to let them know these changes are real, they're going to be happening. And at the same time, we worked with our operations committee to kick off this project. And we had representatives from Fannie Mae, Freddie Mac, and FHFA join in that conversation. So that was basically how our outreach started with our clients. Now, the clients we service are buy side and sell side. And within the sell side, it's primary dealers, other regional broker dealers, banks, correspondent firms. Okay, so that's what I'll be talking to. Now, everybody wants to know about the timeline. Okay, so I'm just going to talk general to where Broadridge stands. Our business requirement is 95% done. I would say that 5% is the outstanding items that are surrounding the exchange and the IRS. But pretty much we have a good feel for where we're going. And we presented this to our clients. And I was a little surprised, but the amount of feedback that we received was pretty much that we were on target. There was maybe one area where we offered up our solution and the clients came back and said, based on our situation, maybe could you look at doing it a different way? And so that's what we're looking at now. But in the meantime, we've already started our development. The new aligned disclosure, that doesn't have to wait until the business requirement is 100%. So based on what we know today, we expect that our development will complete towards the end of the third quarter, and we'll be testing that and providing it in the environment for the clients to begin testing starting in Q4, and we expect that would continue into the first quarter. Okay, and that our clients would be live for Q2 2019. Okay, now the big thing here is we understand we're only in a certain section of the space, but our clients have to be prepared from, like I said, from pre-trade to trade execution. So the key part here is that we have to work with our clients to make sure that they'll be able to meet these dates. Okay, so some of the changes that we know we're working on are the new aligned formats, and we're working closely with Larry and EMBS on that. Then we've worked with clients to determine what information, what new data will they require so that they can support their trading desks and so that they can allocate, right? The nice thing is it's using the existing Fannie Mae tickers, using existing Fannie Mae TBAQ SIPs. But the focus is on what has changed. And the fact that the UMBS will be able to use collateral from both Fannie Mae and Freddie Mac is one of the details that needs to be added to the system so that the allocators can do their job. There's other information related to supers and the collateral makeup that we're looking into as providing. And there's about 5 fields in general that we feel will help the allocator support their desk. Okay. When it comes to the exchange, obviously there's still a lot of discussion going on with the exchange, especially when the brokers and dealers will be facilitating this for their clients, but we've come up with a solution to help the clients when they're settling the securities to make sure there's a linkage between the gold that they'll be exchanging with Freddie Mac and the mirror security, which they need to then send back to their clients. Okay. The relabeling that goes on is not really a big thing as far as internal to the allocation system. It's more important when you're talking about your books and records. So that was an area where we were doing a little more than our clients ended up wanting us to do, so we scaled that back a little. So the idea is to right-size the initiative, to make it work for the clients, but not making it too burdensome. Okay. The other thing I wanted to say is, being that the transaction itself, when it comes down from the front end, looks just like a Fannie Mae, that means there's no change to the trade feed from the front end or from our middle office system to our back office system. So that means that the testing is more of a regression testing when you're talking about the Broadridge space. Again, like I said, the tougher part is for the clients that have to integrate with the front office systems and any other risk system or anything else that they're using that's not Broadridge. And that's where we work very closely with the client to come up with the time frames. And one of the other things that we have is we utilize our professional services team because we realize that the clients have limited resources when it comes to these change the bank initiatives, and they may run into conflicting projects. So that's one of the things that we offer now to help with such a large initiative such as this.
Great, thanks, Mike. And Shell, BlackRock, can you give us an update? Mike, can you hand her the clicker? Yep. Thank you.
All right. Single Security Initiative represents one of the most seismic shifts in the mortgage markets over the past few decades. Now, BlackRock's presence as both a market practitioner as well as a provider of Aladdin requires us to be highly prepared for the adoption of the single security. Under the direction of FHFA, BlackRock's market practitioners and Aladdin experts have been actively engaged with Freddie Mac, Fannie Mae, and SIFMA to provide our continual input on various workflows. This involvement has enabled us to design an Aladdin solution which incorporates our in-depth knowledge of the initiative as well as our expertise in mortgage analytics and trading. We have also tried to incorporate feedback driven by the Aladdin client community, which comprises of almost 80 industry-leading organizations. Now, let's talk about Aladdin. Aladdin provides a full spectrum of comprehensive investment solutions to help clients with their risk and investment management using a single integrated platform and a single underlying source of data. We understand that this initiative will require a significant amount of work, which is why we have considered and allocated various different work streams to account for the impacted workflows. In preparing for the launch of the single security, Aladdin experts have been continuously assessing the full scope of the impact to develop a go-forward business and technology change plan. We also realize that there are external data points in our system which need to be accounted for in our market readiness plan. So for Aladdin's single security solution offering, we are really focused on 4 main areas: mortgage data and analytics, second, trading, third, mortgage operations, and fourth, to provide best execution workflows leveraging Aladdin. Let's take a quick look into each of these focus areas. To start with mortgage data analytics. In line with our single source of data philosophy, we believe that the newly disclosed single security data should be used throughout the Aladdin investment process for portfolio positioning, exposures, and performance attribution. With stringent QC measures, we aim to ensure standardized data to be used further for financial modeling, as well as for any downstream operations as necessary. We will also provide the standardized data to be accessible for Aladdin risk users. So what have we done so far, and what do we plan to do in future? We partnered with Freddie Mac and EMBS to upload and consume the new Freddie single security data, which was published at the end of last year. In fact, we became the first EMBS client to do that data conversion internally. Another example will be only a week ago, we worked with Freddie Mac to validate the new mirror single security data, which was published at the very first of this month. We also plan to work with Fannie Mae for the single security data consumption when it's made available. So that was really the data. As far as analytics, I really have three main key takeaways for you. First, we will expand our product scope for MBS analytics and relative value package. Second, we will bring consistency in the payment delays, as well as any other security attributes for which are impacted like supers. Third, we will create one set of QSIP-based benchmarks and ensure consumption of the latest data from various pricing vendors like Reuters, Bloomberg. Let's move on to the second focus area, trading. We understand that there are various market interdependencies among the participants. So the way we are approaching this is to synchronize our solution with the market evolution and development plans. Our goal is really to ensure that we provide a smooth and consistent transition for our Aladdin clients post-go live. To achieve this, we are creating a new trading ticker to accommodate the uniform single security TBA product. This new asset will be used by all the trading and operational workflows. This is really inconsistent with other market providers, as well as will provide uniformity with external systems like Tradeweb from Aladdin. I also want to touch upon exchange very briefly. We understand that there are still outstanding questions to determine the best suited approach from the viable options which were presented to us in the last working group session of April. The options were investors exchange directly with Freddie, investors exchange with Freddie via dealers, or a hybrid of both. We plan to assess Aladdin workflow proposals after the decision is made, and we will facilitate the exchange by capturing it in our transaction workflow for legacy Freddie Gold PCs to 55-day PCs. Our third focus area is operations. Aladdin's operation solution aims to ensure SIFMA's good delivery guidelines and the TBA market governance. The key change in operations really is to allow both Freddie and Fannie UMBS securities and exchange Freddie Mirror securities to be deliverable into one single TBA. A lot of processes are also driven by prefixes and pool number convention, which need to be addressed as a part of this initiative. We also have, some of our clients actually have connectivity with external vendors. We plan to ensure the external vendors connectivity, like FICC for our Aladdin FICC clearing members and EPN members. We are already working with DTCC to determine the implications around EPN and the latest Novation workflow, and to validate our implementation proposals for FICC workflows like clearing, netting, confirmation, etc. Finally, the last focus area is best execution. Our goal really is to provide consistent look-through and eliminate any risk of failures or operating events. To achieve this, as I described earlier, we are supporting an end-to-end UMBS TBA lifecycle support. We also want to support any client downstream applications which might exist beyond Aladdin. We have access to reporting for transactions, positions, security data, and many more. So that basically covers our 4 main focus area. The last note I want to leave you with is about timeline. Development is expected to be completed in time for each of the single securities milestone I just mentioned. We will ensure completion well ahead of the June 3rd, 2019 go live, as well as the UMBS forward trading timeline. Now, we understand this is an exciting evolutionary time for US mortgage markets. However, there are still outstanding questions to be vetted and ironed out, like the IRS tax treatment, exchange. However, we plan to review our solution for any modifications as needed, and we'll work with all of our clients very closely, as well as other market participants, to ensure a smooth transition and a successful go live. Thank you.
Great. Thank you, Anshel. I think Larry, you're next.
Yeah.
Still water.
This will be kind of a data-focused session. Everybody can hear me? It's been a big project for us so far, but it's gone very well. We've gotten, last summer when Freddie Mac switched over to the new formats, that went very well for us, and we converted those formats back for some clients to give them sort of a soft landing, let them decide when they want to make their changes to these. And so, let me just switch ahead here. The basic 3 areas there, nothing too surprising here. We support the Freddie Mac Mirror securities as they first come out, as they first appear in August, and then eventually as they go live. Fannie Mae's move to the aligned formats. We'll be getting test files for those, providing those out, and converting those back to current formats for clients staying on the existing formats. And we'll be modifying our EMBS database because many clients get our data in a database format for their systems there. So we'll be modifying that as well. For the Freddie, for the mirror support, we'll be setting up the exchange mapping of the 45 to 55-day pools. We'll be creating tables and providing the data for the daily exchanges, the cumulative exchanges, and I think I left out the L1 exchanges as well, actually the L1 status, that would be. And we'll also be providing the float compensation data as that changes over time. We'll be adding a few fields for convert-back clients who are staying on the existing formats for Freddie Mac. Particularly for the daily new issues file, we'll be adding the prefix factor and the balance, which were 3 things not needed previously, but now that mirrors will come out with the factor of the 45-day pool, they will be needed on the daily new issues file. And also adding the prefix to the factor file because the prefix will begin to differ from the first 2 positions of the pool number. For Fannie Mae aligned format support, as we receive the test files from the CSP, we'll be receiving and providing them out to the street and the buy side and all of our clients. We'll be modifying our distribution system and our validations for new values, et cetera, that come through with those. Providing feedback to Fannie Mae on the results of the testing. And also, we'll be running them through our EMBS database and providing the data in EMBS database format. We'll also be converting back the Fannie Mae to the current and earlier formats. We provide formats that exist now for Fannie Mae, Freddie Mac, and Ginnie Mae, and also formats that have existed back through the decades. So it's been 30 years of Factor Guy, and we're providing all of those formats out to our clients. Our database changes, probably won't kind of brush over this a little bit. They're adding the UMBS prefixes, the 4 horsemen as we're calling them, but really not only on the CL, CICT, CN side, but also the Z, the corresponding Z prefixes and products there. We'll be populating the new mirror securities beginning in August. setting up the mirror exchange tables, although the exchange tables will probably follow a little bit since the exchanges won't be taking place until then. We'll need the mapping, but there won't be any daily activity for a period of time. Our collateral tables will contain the mapping to these, and we'll also have separate tables that have them mapping in the Freddie's new format style. We'll be adding prepay aggregations of the 55-day Freddie loan-backed UMBS, and also summarizing the available supply of UMBS. So for Freddie, that would include both the loan-backed UMBS and the mirror securities, and sort of grouping them together with Freddie and Fannie, so you can see in various cohorts the available supply of UMBS. Changing our Fannie Mae TBA designation for our TBA records there from FNM to be UMB, so that they'll be used both for the UMBS trading. And the TBA to Pool Association will be changed to reflect that Freddie and Fannie UMBS pools will be eligible. We'll also be doing a summary of the super pools because Fannies and Freddies will be can be combined into the same super. We'll be adding to our database and providing out to clients the percentage Fannie and percentage Freddie by current balance for each of the supers, and we'll be displaying that on the EMBS screens. Another thing with the EMBS screens we'll be adding is that when you have a mirror security, you'll be able to just click on the word mirror up in the description, and it'll bring up the corresponding or the underlying 45-day pool. There's a project plan that's probably totally unreadable because it's small, but like all good project plans, it ends on the dates when things go live and starts with when we get file formats and test files. And everything went very well when we converted over last summer with Freddie Mac, and I assume it's going to go very well with Fannie Mae. And we look forward to continuing to support the industry. And I thank you very much for having me here today. Thank you.
Thanks, Larry. Jackie?
Thank you.
Thanks very much.
Sure.
Hey, folks. So we've been working with Fannie, Freddie, and FHFA, just like everybody else here, for several years at this point, and having ongoing discussions about, what single security is going to look like on Bloomberg. So we've been thinking about that for a while. I work with the core product team in respect to basic underlying mortgage data and analytics, and our discussion with the agencies has grown to involve many teams at Bloomberg, all of which are continuing to prep for UMBS support. So just to share the scope of what I mean by many teams, last summer, as Larry was just saying, we began also, when Freddie began reporting their data in the new universal file format for data disclosure, our engineering staff worked towards supporting that, and Fannie Mae, of course, will be conforming to that same format as well, so we'll start testing with them at some point soon, just as Larry was mentioning. So that's certainly on track. Currently, that same engineering staff is also planning on mirror pool support, of course, in August. That's our target, which will be a really significant milestone for all of us up here. We'll have the mirrors available on Bloomberg screens for both descriptive and analytical analysis, just like any other new issue pool on the system. And just as users expect those pools to be fully supported on Bloomberg, we have clients that consume nightly data files to update their systems, and of course these pools will also be included in those files with a handful of new fields. We've got gotten a lot of questions from folks that are anxious or concerned about that aspect of Bloomberg support, so wanted to make sure everybody's aware that we're working to make sure that those files are intact and ready to go. Just as users expect those pools to be fully supported on Bloomberg screens, we also know that those pools also will fall into cohorts and generics. Those are families of pools that live on Bloomberg, and when we speak of cohorts and generics, that also invokes the idea of the Bloomberg Barclays Index. Nick Gendron from the Index team will be here from Bloomberg speaking on a panel later about that if you have questions or concerns about how the index on Bloomberg is going to be impacted as well. Next March, racing ahead, we'll be ready to support TBA trading. That will begin. We'll ensure that our screens and our tickets reflect that the June 2019 settled TBA trades are UMBS or identified as such. After that, we know exchanges will begin as well, potentially in May, and tracking exchange activity for both 45-day and mirror pools, making those UPBs that are reported on a daily basis, making sure those are available on our description pages, of course, will be all it is currently in our plan. We plan to reflect the Freddie float compensation values on their contribution page on Bloomberg. Freddie has described that they'll be using a constant OAS approach to deriving those values. Users will also have the flexibility to run a 45-day pool versus a 55-day pool on an OAS screen and see that change in value on their own to match up to the compensation values. And again, we'll be leveraging, or users will be able to leverage the Bloomberg agency prepayment model, which is now the Barclays model, and that's up and running on Bloomberg, so folks can start to play with that. Users that are working with lists of securities will be able to do or assess those calculations in Excel, or assess OAS results in Excel if they want, or programmatically through our core mortgage premium tool as well. But again, the next most important milestone is having those mirror securities up and running in August. So just as a quick preview, and I think, as Larry also was saying, Bloomberg description page up here, we don't expect to have too many crazy, changes. This is our basic description page for a 45-day pool. You'll see a bunch of little red arrows on the page and a red box. There are a few things that are changing. So if I just kind of, cut to the chase, things like we know specifically that for the mirror pools that are out there, we're going to have new pool numbers. Bloomberg is going to retain or move to Fannie symbology, so any FG pool that we've had to date that's TBA eligible will take on an FN, if you will, prefix in respect to that pool number, or FR will be the prefix if it's a non-TBA eligible pool. So there are a couple of new nuances that folks will need to be aware of, but again, nothing should be too surprising given the timeline we've had and all the prep we've had and all the training we're going to continue to do. Yes, CUSIPs of course will change. We'll get a new pool type, but again, we're adopting the Fannie convention like CL, for example, for their 30-year program that's TBA eligible. We'll have new issue dates. We'll have a delay date that's 55-day. New servicer will be SCR mirror as a label, and we'll have generic cohorts that the Fannie or Freddie pools will move into, which again will be the Fannie cohorts that are in existence out there. So new screen looks pretty much the same, but again, red arrows pointing to the things that changed. So kind of maybe a basic example here, but obviously we're sitting back thinking about what needs to change. We've got everything pretty much on track. Our engineering staff is with us here today if anybody wants to come visit us at the booth and ask some questions later on. But that's about it. So thank you.
Thank you. Barry, I think you're up.
So good morning, everyone, and thank you for the opportunity to be here. The Yield Book, which was recently acquired by the London Stock Exchange Group as part of the FTSE Russell division, remains committed to supporting the mortgage industry, including, of course, the move towards a single TBA security, which is scheduled for 2019. To that end, we've been diligently studying the playbook and the updates and the other data and files that have been provided. We've been meeting and working with the agencies on both a one-on-one basis as well as at industry conferences to prepare for this important change. In particular, the Yield Book has been working to prepare its databases, its applications, and in coordination with Citi, its models for the upcoming change. The changes have implications for screens and analytics for TBAs, pools, and REMIC securities. We have been working to load sample securities where they have been provided by the agencies and to create our own samples where they have not. I'll walk you through a few examples of the changes we are working on and what you could expect to see when these changes are rolled out. So let's begin with what we have today. So our current TBA view, we have TBAs for each Fannie and Freddie coupons and settlement months. Each entity has its own assumed deliverable characteristics such as WAC, loan size, FICO, and what we believe is likely to be delivered for that agency entity into the contract. As the UMBS TBA begins to trade, we plan to use the existing Fannie Mae ticker and CUSIP sets and its 55-day delay to represent the new UMBS TBA security. The delivery assumptions will include eligible pools blended from both Fannie and Freddie, The existing Freddie TBA will continue to be available on the system as long as it's trading. As part of the initiative, owners of eligible Freddie 45-day PCs will be able to exchange their pools for a mirror 55-day equivalent. New Freddie 55-day eligible pools will move to adopt Fannie prefixes, and pool numbers will be divided between the agencies to ensure uniqueness. In this case, you can see the pool code or prefix as CL, the code for Fannie 20-year collateral. The pool ID after the U begins with the letters ZI, consistent with the new guidelines for the Freddie pools to begin with the letters Q through Z. We've been following the provided playbook closely in anticipation of the changes, and those changes are what you can expect to see implemented in the Yieldbook. Additionally, Yieldbook will be monitoring the daily exchange reports and allow users to see for each pool, 45 or 55, what the mirror security is and the tradable amount for each of the securities. For example, by clicking on the pool collateral of a mirror, similar to what we have today for Megas and Giants, you can see the original 45-day version of the pool and vice versa. So you'll be able to go back and forth. In terms of compensation, Yieldbook currently allows the users to modify the delay of a mortgage. Simply using the model at a constant OAS, modifying the delay from 45 or the pay date from the 15th to the 25th will allow you to calculate the fair value or the model fair value of the exchange. This can be done for a specific pool, a list of pools, or a complete cohort universe. For certain cohorts, the model fair value does seem to stand out from others. As part of the initiative, Fannie Mae will begin issuing pools with additional disclosure data to match that of Freddie. To simulate this, we have recoded as Fannie Mae pools several Freddie Mac pools with its additional disclosures, such as delinquency data and cash out percentage you see on the bottom of the screen here. This provides us with the ability to test the anticipated disclosures alone or in a commingled scenario. So as part of the initiative, the commingling of Fannie and Freddie Mac collateral will be possible in a number of different scenarios. What you see on the screen is the combination of Fannie and Freddie in a REMIC structure. However, you can also have the combination of Freddie 55-day pools with Fannie 55-day pools in a new super. The combination within a REMIC structure of an already commingled super with either Fannie or Freddie or perhaps even both collateral. And finally, we are preparing for the possibility that there will be legacy Fannie pools without the new disclosures, side by side with new issue Fannie pools with the new disclosures. So each of these combinations creates a possible technological and prepay model pain point that we are diligently testing so that when the single security arrives in 2009, the Yieldbook will be ready. While we continue to test our products and models in advance of the change, we also welcome client feedback. We will be posting a working document on our website on our single security readiness. It contains much of what you've seen today in just a little bit more detail. We have a table outside where several of my colleagues and I will be available to answer your questions. Our help desk and account management team are available as always to help you through the transition. So thank you very much, and we're looking forward to your feedback.
Thank you, Barry. Courtney, thanks for being patient.
Thank you. Okay, so we have also been working with this advisory group for some time to ensure that our market is prepared for and aware of the changes that will impact them once UMBS is live. Throughout the course of our history, we've had a handful of opportunities to innovate within our marketplace, most obviously with our round robin tool that has vastly simplified the trade assignment process, and more recently with our specified pool platform that utilizes both pre and post-trade integration. So for us, the single security initiative is really no different, and our primary message is that we will be prepared to support it once the live date approaches. And perhaps more importantly, it's actually a relatively straightforward initiative from our perspective, resulting in what is basically a major label change as opposed to a fundamental overhaul of the underlying securities. So we envision there being minimal, if any, disruption to our pricing, market data, and post-trade feeds. And we've put together a couple of slides here to illustrate how we see the transition. So first here, pretty kind of rudimentary timeline. First item on the list is testing. Our testing environment will be available in November of 2018. Forward trading begins on our screens in March 2019, and consistent with the June 3rd date, first settlement is obviously June of 2019. And here we have a snapshot of our mortgage composite. This is when we begin to show the transition from 2 unique agency securities into one. We have the June settlement date highlighted in yellow to illustrate that it is the UMBS deliverable as opposed to Fannie Mae. And there is no longer a June TBA market for golds, nor is there a May-June roll. And Ginnie Mae 2 securities are unchanged. Okay, so 60 days prior, obviously June and July are highlighted in yellow, again illustrating that they are UMBS securities as opposed to Fannie Mae. And gold continues to migrate off of the main screen, though we will have them somewhere in the background so long as there is a tradable market. Finally, 30 days prior to the first settlement, the Fannie Mae label is no longer required, as all the instruments are now UMBS. And our last slide, this is our 30-year main screen. At the moment, in production, we show Fannie's golds and Ginnie 2s. Since golds will no longer be on the page, we have an open slot, so we've put Ginnie 1s in there. So as you can see, it's a relatively straightforward change for us. We are committed to ensuring that we have a robust and reliable trading platform, and hope to kind of minimize any potential market disruptions. So we're happy to help with that in any way that we can.
Thank you, Courtney. So I've got a couple of questions, then I'm going to open it up. But and Chal, maybe I could start with you. And you all have touched on it, but I'm curious about just client engagement and the process that you all go through to ensure that you're getting to them what they need.
Sure. So let me say this. One of the major impacts in the market readiness plan will be really driven by the service providers. To mitigate the risk associated with not being fully able to understand the scope of the impact, as well as to stay on top of all the market evolution and developments, our product teams are ensuring representations in various working group sessions and forums hosted by Freddie Mac and various other participants, like investor readiness group, custodian readiness groups, and operational forums. So we are really collecting all of the data points which might need to be worked upon as a part of this initiative, rather than relying on one full final specification to be published by someone else in the industry. We are working on a detailed business process and technical specification, which will outline all the new functionalities and Aladdin impacts to meet the initiative requirements. We will share this with all of our Aladdin clients, and obviously we'll review it if there are any changes. Our internal BlackRock solution teams are also ensuring to cover each of our clients for in-scope product tools and workflows. I'm saying this because we know some of our clients have unique workflows. So we are already engaging with them to understand those unique requirements and to come up with this out-of-the-box and customizable solution, which is why we are really considering a workflow-based approach. So this basically means that we have our workflow-based working teams focused on the 4 different work streams, which I mentioned earlier: data, analytics, trading, and operations. We are already engaging with our clients, and we plan to host ongoing working group forum discussions, as well as other client WebEx discussions. And we want to introduce the 4 work streams to our broader Aladdin client community, and also want to share our current design and proposals. We plan to advertise our ongoing communication approach, our testing strategies, our deployment plans in these forums. The idea really is, instead of like our clients reaching out to us, whether to understand where Aladdin stands in terms of the preparation, we take preemptive measures to facilitate that communication so as we can align our Aladdin initiatives with our client's readiness plan. So I know I spoke a bunch of things here. Let me just summarize it for you. 3 really main points here. First, we will stay on top of all the market developments. Second, we are working on a detailed documentations incorporating our unique client workflows. Third, we are structuring and organizing our communication channel and our client engagement model based on the workflow approach to share any implementation details.
That's great. Jackie, I remember being at Bloomberg probably 3 years ago, and Fannie and Freddie, we had kind of our ideas and our proposals for you all, and you all made it clear, hey, this is great, but we're actually going to be doing what our clients want us to do. So I'm just curious, how do you get that feedback from them?
From clients at Bloomberg, there's several channels. We have an analytics desk, first and foremost, that folks can use 24/7. So we have a ongoing dialogue, if you will, with clients on a daily basis. And in fact, we have chats, live chats that even our engineering is involved with, as myself, and points of our analytics desk. So it's an ongoing dialogue on a daily basis, really, with clients in respect to their needs for mortgage data and analytics and questions and concerns. That said, we also have a team of specialists that are mortgage specialists that basically roam the country and the world, if you will, and specifically go out to talk about any kinds of topics that we have at hand, that mortgage agenda that we need to get out there. So between our analytics desk and our specialists that we work closely with, we think we've got a pretty good team in place to go get the word out. And then all of our clients have their own sales coverage. They've got regular sales coverage with folks that come visit them regularly. We're on the phone with them. So we hope that we are servicing clients through those various channels.
Mike, I'm curious what about you in terms of clients and engagement?
Yeah, so from the start, we were very clear with clients because we had just gone through a multi-year project with the FICC, with the MBS Novation, where everything was from the back office side, where the changes were. So since that's our space, we knew exactly where we had to go and what we had to do. For this, we were saying it's such a large change, and the clients need to take a look at how it's going to affect them rather than Broadridge telling them what is going to happen. So we started in a smaller group, and we looked at changes from that perspective. And we also then had, so that was more from the bottom up, and then we also had the presentation to the executive management team at our clients so that they could understand the full scope of this project and what they need to do to be prepared for this. So we work with them along those lines.
Great. Courtney, what about you?
Sure. So because our mortgage platform is one of our kind of legacy markets, I think we always try to kind of keep an ear to the ground with various pain points that are affecting our marketplace. Margining UMBS are things that have started to be talked about a little bit more in the past couple of months. So to the extent that we can kind of work those into conversations about initiatives that we are working on or new pieces of functionality, and potentially offer insight or potentially facilitate conversations between our customers and Fannie and Freddie, I think that's how we can most help here.
Great. Larry, what about you?
When we first looked at this, we looked at it and said, we could have clients that have huge changes, or we could potentially help them have almost no change in the data that comes through. And so we tried to give that as options to clients there, saying there's a new set of formats, these are the things that are available through them. We also believe we can convert things back to the formats that you're receiving now with just a couple of small changes there, and then that sort of gives you a soft landing, an ability to do that when you, to switch to the new formats when you're ready. So we're dealing with clients who receive data in formats as they come from Fannie and Freddie, and then also as they come from the EMBS database format. And so we're sort of speaking separately with all of them, and we just really gave them a lot of choices there. And as BlackRock mentioned, they were the first ones that converted over to the first ones. But we're seeing now more and more firms now making switches to that. And so we're just trying to give our clients choices for that and having them come back saying when they're ready for the various changes, and so they can work with it through their systems there.
Right. And Barry, you're the one that kind of stoked me in the question. You mentioned client feedback. Is there anything else to add?
Yeah, sure. So firstly, our clients are not shy. They come to us and they put requests and demands in front of us. So we certainly look to be responsive to them. I think an industry conference like this, where we get to present and have tables out there and get feedback and have dialogue with our clients, are great. So we certainly appreciate it. From our perspective, what we want to make sure is that this is as smooth as possible. We're trying to preempt a lot of the changes by creating securities even before samples are available, creating some of the commingled scenarios, running them through our model, seeing results, making sure everything's smooth even before these securities are created, and I think ultimately we want to put put that in the hands of our customers. We want the customers to be able to test these securities themselves, see it on our system, and also see how the download process, how it works once it leaves the yield book within their platform. So providing them the ability to kick the tires and test their own internal systems through our platform as well.
Great, thank you. It's clear that you all have done a lot of work, and it's clear that you all are critical to this industry. I want to open it up for questions and see if folks have any.
If you have questions, you can raise your hand. We have some folks who have mics.
Specifically with, is this on?
It is.
Specifically with dealing with BlackRock and Bloomberg, is there an easy identifiable field that will indicate who the guarantor is of the security? Let's say I have a Fannie Mae, but I don't really know now who's guaranteeing it, Fannie Mae, Freddie Mac.
Yeah, I believe we'll make that available on our descriptions page. We'll know that because they're giving that to us in their feeds, so we'll know exactly who it is. So we'll just make sure that we already have a field, in our API or Excel, if you will, in our data license files that always, is the issuer field. So that'll still reflect Fannie or Freddie. So that'll be available on our terminal description screens as well as through files or the API or Excel.
And pretty much same goes with BlackRock. We already have an issuer field which we identify like Fannie or Freddie or any other issuer. We will continue to use that. However, that issuer will change to UMBS as of now. But we will provide some sort of description to identify what is the underlying security in that TBA.
So that is an interesting question. So when you think about megas, giants, and supers in the future, and REMICs, will there be an easy way to understand kind of the mix, the Fannie Freddie mix of the underlying collateral? Obviously, you can go pool by pool and figure it out yourself, but I'm just curious if there'll be a collateral summary, if you will.
Yes, so.
Any one of you.
Go ahead, Mike.
No, I was going to say, yes, that was one of the first things that our clients came to us with, not knowing where this is going to go. They were saying, hey, provide that. So we gave Larry a call because we didn't want to have to, when you're talking about especially in the allocation space, you don't want to have to load the loan level information. There's a whole lot of data there that wouldn't be used by an allocator. So we had asked Larry if he could provide that information, summarize it for us. So we'll be providing that information throughout the application, 2 new fields stating what collateral makeup is of the supers.
Great. Any other questions? Please.
Actually, it's a related question to Larry. Larry, in your slide, you said you're going to provide for the mirror security, the collateral type are going to be pool-like. And you also said for supers, you're going to provide the fraction between Fannie and Freddie. Like,
Right.
how do you tell a UMBS is a super, whether it's a mirror security or it's a new security? Because for the mirror one, by checking out the collateral type pool, like it's not necessarily clear whether it's truly super or it's a fake super, like.
That's true. It'll be, the collateral type will be pool for either one, for a super or for a mirror. Have I got that right? Yeah. And, but we do have the collateral. We have a collateral table that then contains the details of the pools that back that. So we know the agency that issued it, because we have and we have that in our agency field, so that'll say Fannie or Freddie, because they were the ones that issued it there. In our collateral table, we'll have the listing of the pools that make it up. For a mirror pool, it'll just be the single one. For a super, we'll have the corresponding ones. And then we're going to have a separate table that's a summarized table that we'll be providing out to clients, including Broadridge there, that'll have the percentage Fannie and Freddie by balance there. So I think we've got enough separate fields there that's going to handle that right there. I hope so.
Other questions?
Over here, yes. Question along the lines of guarantor and issuer. I think it makes sense with what you guys are talking about from a pool standpoint, but who is the guarantor issuer? Who would we use from a data point as a guarantor issuer for the TBA?
So it's the initial issuer of the level 1, but then at level 2, level 3 resecuritization, the issuer is the issuing entity regardless of the underlying collateral. Does that make sense? So Freddie Mac could have Fannie and Freddie level 1 in a new super, and Freddie issues that, they would be considered the issuer, notwithstanding Fannie collateral being part of the trust. Anybody else over here?
Will the prepayment history for supers, particularly for more seasoned collateral, will they only go back to the issue date of a super, or like how would an investor be able to access more of a look back for the legacy securities, like they do now for Megas or Giants, and go to the collateral file at inception, or how would that exactly be captured?
On our screen, you'll be able to click through. Barry should take this actually, but let me just say it quickly and then let Barry jump in. Probably have the same data, but you'll be able to click through and see the underlying security and its history there, and then you'll also be able to see what history there's been at the for the bureau security, and so we're looking at that, and we're actually trying to make it sort of a determination of how closely we should show that on the mirror security itself. And so, and I know that Yieldbook is taking a look at that same issue, so Barry should really jump in.
Yeah, sure. I mean, we're thinking of it very much like a Mega or Giant. So just in that case, just in the same case as a super, we would be able to look through the underlying and have that history. So that would be an expectation to have that history.
Other questions? One back in the back there.
Thanks. I guess this is a question specific for TradeWeb. And the screen that's up now, if this is June of 2019, what will be in the FNMA tab?
You know, I think FNMA and UMBS will probably be merged.
Oh.
So FNMA, this is just a mock-up, so it likely won't be there at all.
It's a good question, though.
Yeah.
I don't see it.
Any others?
Yes, as a follow-up to this gentleman's question, what are the screens going to look like? I guess it's going to be in April when you're transitioning and you're going to be trading both Fannie Mae's and UMBS.
Right. So let me see if I can go back here. I'm in. Do you know if I can go back?
I don't
Yeah,
know.
I might not be able to go back. So we have a marketing piece that we can show you. It's actually at our booth. And basically, it's just oh, there we go. Back one more, if we can. There we go. So it'll just say Fannie Mae / UMBS to indicate that both Fannie Mae and UMBS are being displayed at that point.
Time for another one or two. Anyone else? Okay, so I want to thank you all very much. I think there's a 15-minute break before the next session starts, so thanks again.